Just a couple interesting statistics here. For every $10 that Facebook rises above 38, that's an additional $4 billion in the collective pockets of shareholders. The Journal has a fascinating tidbit on some of the limit orders. People who want this stock, even if it gets up to $4,000 a share, according to at least one limit order that the Journal went through. Finally, Brian Sullivan's been tweeting this morning about Bono, of course, the front man for U2, who, guys, will make more from his investment in Facebook than he will have made from his entire career in music. Which reminds me of another story. Kayla told me once that Kenny G, the great saxophonist, got rich not based on being Kenny G, but rather on his angel investment in Starbucks. So a lot of people are going to get rich in ways that we did not expect just a few years ago.
This is one of the first times he's on it.
We'll keep an eye on the IPO cross. I guess you guys must have your hands full back at the NASDAQ. We should mention that a lot of the, at least, atmosphere here back in Menlo Park has faded because people were here all night at the hackathon and are now making their way home. But clearly, given the fact that we've talked to so many investors and bankers in the last hour, that this is where it's really going to get interesting. Cramer's talked about the performance of IPOs on the first day. Typically not a good indicator of long-term performance. Look at Pandora. Did an amazing first day. It has turned out to be long-term one of the relative losers of IPOs in the past year or so. So don't take any lessons about what Facebook does today, because the real question is going to be what happens 91 days from now when lockups expire, toward the end of the year, when you look at the possibility of more tax selling. But it's certainly going to be more of a parlor game, I think, than anything among traders, bankers, investors, and just market watchers. This is the game to see where it ends the day. I think we're just a few seconds away from watching this open. We should mention as well, Deutsche Börse has already said this morning that it's not going to start trading over there until it does start trading on the NASDAQ. We saw Bob Greifeld this morning here in Menlo Park, a real illustration of just how far the NASDAQ went to get this business. That Greifeld rang the opening bell here with Mark Zuckerberg and Sheryl Sandberg, rather than back in New York, where we should point out also the CFO of Facebook, David Ebersman, is meeting investors and bankers as well. Jim Cramer, I think, is on the phone today. Jim, we've talked a lot about first day performance, but I gotta assume you're at least curious how the afternoon sets up for FB.
Well, I'm looking at a couple of stocks, Carl, that are distinctly good for FB. First of all, Apple. A lot of people had felt, what's the matter with Apple? What's the matter? Maybe that's an harbinger. Now it looks like the people were selling Apple in order to be able to buy more Facebook after it comes public. That's a big institutional trick. Secondly, I like the action in LinkedIn, which is the company that is the best analog to Facebook, and that stock's been doing well. And then third, here's an off-the-wall one, but the Spanish market did not hurt us last night. And fourth, gold is up. There's a lot of feeling when you see gold that the Europeans are going to do something good. I mentioned those because those are actually going to come into play on Monday after Facebook goes public.
Yeah. These limit orders, Jim, where people want a taste of it no matter what the price, I assume you think that's inherently dangerous.
Well, you know what, Carl? We have to go on history. It's all we really have. And you know that the average stock has had a 42% increase on the first day. But we've often seen the best time to buy is not the opening. We have seen pops at the opening and then see further rise, and then sellers came in. So what I would warn people, here, let's do this, because I can't convince them not to use market orders. I can't convince them to use a limit order of 1,000. How about this? How about buy half then if you're really going to buy? Buy half. Buy it all. I'll do anything, Carl. I'll do anything to try to help people from this bell here.
Yeah. NASDAQ, as you can see from the bottom of your screen, the IPO may begin trading at 11:05 a.m. now, Jim, rather than 11 straight up. I wonder, having gone through this on thestreet.com, having watched Microsoft go public, logistically, is this any more difficult given the size of this company, given the attention paid to it, or is this how is this supposed to work?
I think this is a logistically very difficult deal because there has not been a company that has captured the younger person's fancy obviously they did that deal very differently, offering you a great value. The most sophisticated investors in the world are selling, and they're selling a huge part of what they own. The least sophisticated investor I can recall since the year 2000 is buying. That is the dichotomy that I fear.
Jim, I'm not going to let you go quite yet. Got a couple minutes left, and I know, guys, back at the NASDAQ, you have a clock. I do not, so I'm going to toss it back to you and let you walk us up to the very first trade.
We are just about a minute plus away, Carl, from the first trade here. But what is so staggering is that this looks like it's going to go at 42, at least right now, 42. And I want to bring in Gary Kaminsky, our capital markets editor, for more on this. Because, Gary, you're actually hearing that it would have gone higher. And so this is sort of a surprise that it's at 42 right now.
Well, as soon as this indication IPO cross was visible to all, it looked at first a $45 opening. You've seen some selling come in, this transparency, the actual ability for those to see. So we have the early indication 45, looks now at 42. We're showing 70 million shares paired off there. I was just talking to Bob McCooey, who was on earlier. You'll see that volume jump dramatically on the open print once it happens, because there are orders that will trigger once we open.
Which is about 15 seconds away, David.
42 it's got to be a surprise. I have to admit, I mean, most people would not have expected if we open only 4 points above 38. We're talking, what, a little over 11 or 12% bump on the open. That would be surprisingly small in terms of the premium. Not that it's a bad thing, and it may show a very stable market.
There'll be many that will say, look at the early indicator range, not the range where they priced it at 38, but where was the original pricing range? Look at the valuation then, and then look at the premium that it'll be versus that. You know how the bankers work. That will be the story they'll want to tell later today.
So what will the spin be if it's priced at 38, it goes at 42, let's just say? Is the spin that they didn't leave any money on the table, it was priced appropriately?
It was priced
or are we going to hear from critics, you know what, maybe it wasn't as good and there were some skeptics on the street?
I think the headlines tomorrow, if we price at 38, we open at 42, it was priced well. They did a very good job balancing supply and demand. And we'll talk about retail later, Melissa. But retail was well rewarded in this distribution. Unlike any other transaction that I think I've witnessed, retail participated in a major way here.
But 42 is where it was trading before they had to shut everything down.
44.10 was the last trade on Shares Post. 44.10. Yeah. So how does that factor in?
The secondary market through this process.
Right. Well, again, Simon, the gray market were trades that was sort of when issued trades. They weren't actual trades that were taking place. They weren't NASDAQ sanctioned trades. They were trading at a much higher level. They were trading at a much higher level earlier this morning, 8 o'clock, 8:30.
We get a 4-point pop on this, it'll be very interesting. I think the underwriters will have done a good job bringing this thing very close to a valuation that institutions were happy with, but that is not
exactly
over the top. What is the takeaway, though, for investors who missed the chance? I mean, 44.10 was the last trade on Shares Post in March, and to think that if this comes out at 42, that the market cap on the stock is actually, the market valuation has actually gone down.
Well,
compared to the implied market
trades.
Exactly. Those aren't big liquid trades. Again, I think that the general banking community will send a message. We did a very good job here. We priced this thing at the right level, and we gave those that wanted to participate in the private market, they couldn't. They can basically invest at the same level.
If that is the context, does that mean the other trades like LinkedIn, which doubled at the open, were priced wrong?
Well, but that was a 6% flow.
Exactly.
That was such a demand-based. They issued so few shares there. As well. Jim, let's bring you in on the conversation also. I mean, this thing looks like it's going to open up 4 points. That's significant. You're talking about a lot of shares out there, but nonetheless, perhaps people heeded some of your warnings.
This is a really good sign. Remember, the brokers, the underwriters had the option of opening it very close to this because, remember, they can change the pricing at the end. They didn't. I think they kept some discipline. It looks to be that the individuals themselves may have some discipline. Don't forget, it is a gigantic deal, and there are still a lot of guys out there who just say, you know what, I'm going to ring the register no matter what. But yes, it's a victory for the process if we get that kind of pricing. It's a good picture.
Yeah, and Gary, as you pointed out, retail's getting a decent slug here. Both, we had Bank America, we had somebody from Equity Capital Markets on. Merrill Lynch is going to get Morgan Stanley lead underwriter, owns the biggest brokerage in the world.
And David, as I mentioned to you off camera, I'll say it now on camera, Smith Barney Brokers were very, very pleased. The legacy Smith Barney Brokers, I should say, the merger with Morgan Stanley in terms of the retail. Legacy Smith Barney Brokers were very, very well rewarded in this transaction. I think a lot of it had to do with the fact that Morgan Stanley wanted to send the message, we are one family, we're one happy family. And if you had a retail account with Smith Barney and your broker didn't get you shares, then I tell you should question that.
As we are just moments away from the opening of Facebook, take a look at the crowd outside the NASDAQ market site here in Times Square. It has grown as we are anticipating this first trade, as we're watching the IPO cross at the NASDAQ. 42 is the indication here, and lots of people out there are really wondering what this thing is going to open up. This will be a historic moment here at the NASDAQ market site.
Reigniting retail interest, perhaps, to where we were not so long ago, Gary.
Yeah, I think so. I mean, for those that had retail accounts and participated, they can say, I did go into the Facebook IPO and I got shares. It's been a long time, and David pointed out in terms of some of these other deals, the small percentage of the float that was actually issued in these IPOs. Right. Retail participated in this transaction across the board.
Perhaps maybe enough so that they didn't even stemmed some of the aftermarket demand. Yeah, I don't know, but again, 42 up 4, nice, but not certainly what some had anticipated.
Carl?
Carl?
I just want to say, I want to make sure we don't whip ourselves into a frenzy over this initial trades. I mean, it's been written this morning, Jim, that this is the equivalent, the business TV news equivalent of a car chase, right? I mean, it's really, really interesting. You don't know how it's going to end. Long term, how important is it going to be? Because it's not about valuation today. It's about extreme near-term momentum and about extreme near-term supply and demand, right?
Right. And let me just tell you, let me give a little contrary view. I just want to put this out. There'll be some people who are actually kind of disappointed that it doesn't open higher. We have seen some deals where people say, hey, you know what, that was just okay. There isn't more to it. Let me just go ring the register. So remember, the cross currents here are going to be very huge because of the car crash thing. There's a lot of people who've been telling me, hey, Jim, you're skeptical, but we've been really skeptical. Everybody's skeptical. We've all learned. So, again, there's the cross currents here are amazing. The car chase analogy is one that is a lot of people who own the stock are worried it's going to play out, and they might want to hit some bids.
Yeah, all right. Well, but this is one of the largest capital markets transactions of all time as well, Gary, that we've seen in certainly many years. And for those institutional accounts that may have thought, hey, this is an opportunity to just really make a lot of money quickly, it may not be there.
No, and again, the bankers are going to tell you that's a good thing. Right. That they weren't necessarily paying up the hedge funds. Jim, what I have heard, and I like your thoughts on this because I think it's kind of interesting. Retail brokers, big retail brokers, have spoken to their clients, and their clients tell them, I have zero interest in selling these shares.